Nvidia just made over $120 billion in profit last year, more than Amazon, Google, and Meta combined, and Wall Street still can't decide if this stock is unstoppable or dangerously overvalued. Hello everyone, welcome back to the channel. Today we're breaking down Nvidia stock, the AI boom, the hidden risks, and whether this company could still become even bigger from here. Nvidia generated $216 billion in revenue this year, growing 66% year over year, while its data center business alone delivered staggering numbers. In the last quarter alone, Nvidia's data center division generated $62 billion in revenue. That's not normal growth anymore, that's complete industry domination. But despite all of this growth, analysts remain deeply divided. Some believe Nvidia could still double from here, while others think the stock is massively overvalued. So I spent the last week digging through Nvidia's financials, analyst reports, earnings calls, and one major risk almost nobody on Wall Street is talking about. Some analysts believe Nvidia could surge toward $320, while others think the stock could eventually collapse by nearly 40%. So who's actually right here? Is Nvidia still the greatest AI opportunity of this decade? Or are investors walking straight into a dangerous bubble? And if you're trying to understand where the market is heading right now, make sure to subscribe because we break down major stocks like this every single week. Now let's start with the bull case, because the global AI infrastructure build-out happening right now is unlike anything the tech industry has ever seen. Bank of America now predicts nearly $1.7 trillion will be spent building AI data centers through the end of this decade, and Nvidia sits directly at the center of it. Microsoft, Amazon, Google, and Meta all recently confirmed the same thing. Demand for AI compute is still massively supply constrained. Nvidia's biggest customers are essentially begging for more chips right now, because the AI race is accelerating faster than infrastructure can keep up. And Nvidia's roadmap looks completely insane. Blackwell Ultra is ramping right now while competitors are still struggling to catch up. Then Vera Rubin enters production, followed by Rubin Ultra and eventually Feynman architecture, giving Nvidia a multi-year technological lead over almost the entire industry. Nvidia's newest systems are already being prepared for deployment across Amazon, Microsoft, and Google as the AI arms race keeps accelerating worldwide. This is what makes Nvidia so dangerous to competitors. Their roadmap already stretches years ahead, while rival companies are still trying to launch first-generation alternatives. Then Jensen Huang made one of the boldest statements in modern tech history when he suggested Nvidia could eventually become a multi-trillion-dollar revenue company. That sounds completely insane at first, until you realize Nvidia already generated $216 billion in annual revenue this year alone. If AI factory infrastructure expands even close to management expectations, Nvidia's future revenue potential could end up being far larger than most investors currently understand. But here's the problem, and it's a massive one. The entire bull case depends on Nvidia executing almost perfectly for the next several years. Nvidia is trading at a valuation premium that assumes explosive growth continues without major disruptions, delays, competition, or demand slowdowns. Analysts already expect Nvidia to massively beat earnings estimates again, which creates a dangerous situation where perfection is already priced into the stock. And that's the risk. Even if Nvidia reports incredible numbers, the stock could still sell off if expectations are simply too high. And competition is becoming very real. Google, Amazon, and Microsoft are all aggressively developing their own custom AI chips to reduce dependence on Nvidia. Alphabet recently announced it plans to deliver TPU hardware to outside customers, directly attacking one of Nvidia's strongest competitive advantages. The AI market itself may continue growing rapidly, but Nvidia probably won't control 80% of that market forever. Then there's China, which remains one of Nvidia's biggest long-term risks because export restrictions continue limiting access to a massive market. Huawei and other Chinese companies are now racing to build competitive AI hardware domestically, creating future threats Nvidia may not fully control. So right now the market is trapped between two completely different futures, one where Nvidia dominates the AI era and another where expectations collapse. But here's the part most analysts still don't fully understand. And honestly, this may be the most important piece of the entire Nvidia story. We are now entering a completely different phase of artificial intelligence called inference, and this changes everything for Nvidia. For the last several years, most AI spending focused on training models like ChatGPT, Gemini, and Claude, using enormous amounts of computing power. But inference is different. Inference happens every single time people actually use artificial intelligence in the real world. And this is where demand could become exponentially larger because AI isn't just for tech companies anymore, it's expanding into every major industry on Earth. Every AI chatbot response, every AI-generated recommendation, every autonomous decision, and every AI agent action requires inference computing power behind the scenes. And Jensen Huang clearly understands this shift because Nvidia is no longer positioning itself as just a semiconductor company anymore. Nvidia is building chips, software, AI agents, networking systems, and entire AI infrastructure platforms designed to power the next generation of computing. This is the real long-term bull case. Nvidia doesn't just want to sell processors, it wants to own the entire artificial intelligence pipeline. And if inference demand scales even remotely close to what many experts now expect, Nvidia's current valuation may eventually look surprisingly cheap. But none of this guarantees a smooth ride. Because markets don't move in straight lines, even when the long-term story looks incredible. Right now, expectations for Nvidia are extremely high, meaning even strong results may not be enough to satisfy the market. Over time, major cloud companies are actively trying to reduce their dependence on Nvidia by building their own in-house AI hardware. Geopolitical risks also remain significant, especially with ongoing restrictions on advanced chip exports to key international markets. And finally, competition isn't just coming from one direction anymore, it's coming from multiple global players building entire alternative AI ecosystems. So the reality is simple. Nvidia is still delivering explosive growth, but the market is starting to question how long this pace can realistically continue. On one side, revenue is still accelerating at extraordinary levels, but on the other side, valuation concerns are becoming harder for investors to ignore. This is why institutional investors are now debating position sizing more than direction, because everyone agrees on the opportunity, but not the timing. But zooming out, the long-term AI infrastructure build-out is still in its early stages, and Nvidia remains one of the key foundational players. So the truth is, Nvidia is no longer a simple bullish or bearish story, it's a high-stakes transition into the next era of computing. Because at the end of the day, Nvidia isn't just a stock, it's becoming a core layer of the global artificial intelligence infrastructure. Every major industry, from finance to healthcare to transportation, is now actively integrating AI into its core operations. And Nvidia's revenue trajectory reflects that transformation, with growth that continues to outperform even the most aggressive expectations. Yes, volatility will continue. But historically, transformational technology companies often move through sharp corrections on their way to long-term dominance. And investor sentiment will continue to swing between fear and optimism as new information reshapes expectations every quarter. But regardless of short-term sentiment, Nvidia remains at the center of nearly every major AI infrastructure decision being made today. Whether you believe the bull case or the bear case, both sides agree on one thing: Nvidia is shaping the future of computing. The real debate is not whether Nvidia matters, it's how large it will become over the next decade. And in that future, AI won't just be a sector, it will be the foundation of the global economy. So the question isn't whether Nvidia is important. The question is whether the market is fully pricing in what comes next.